Jonathan Sherman here. Today we're going to go into a trade I did in a little tech stock called CBeyond. They're an IT company. They provide telecommunications and cloud services primarily focused on small and mid-sized businesses. From a press release here, you can see that they describe themselves as a technology ally for small and mid-sized businesses. And it's IT infrastructure management. They deliver cloud services, communications, connectivity, and they have an award-winning enterprise data center, private IP enterprise network. They were founded in 1999, and later they were acquired after I did the trade by Birch Communications. Let's see how the trade unfolded. From my Form 4797 from my tax return, it summarizes the trade. It shows that I got in purchased about 4,000 shares of the stock on March 16th and held it for a little over 5 weeks and profited with, it looks like this is about a $16,000 profit, about a 25-30% return on the trade. So a pretty good trade for 5 weeks, making 25-30%. I ended up getting out of the trade. The market was starting to weaken, and this stock also started to weaken. So it looked like it was a good time to get out. It looked like the initial surge was over with and started to get out. Now, it's important to remember that you want to sit in these stocks for as long as you can, as long as they're working, because it's the sitting, not the trading, that makes you the money, right? So you watch it every day, make sure that it's behaving, that it's not giving any sell signals, that it's not breaking down below any important moving averages, that big sellers aren't coming in. There's suddenly days with big red volume, big selling volume, which would be a signal to maybe you start getting out of the stock. These are the trade confirms for when I got into the trade. You can see I started buying it on the 16th. I bought all shares on the 16th. Got in at 500 shares here at, let's see, it was 100 shares, 500 shares here at 14.65, 100 shares at 14.5, another 500 shares, 14.7, another 100 shares at 14.5, another 100 shares at 14.5. So averaged in pretty quickly. There wasn't a big extended average in. Was pretty happy with the way the chart looked, and I wanted to get in pretty fast because I really thought that it was going to move pretty fast. So I bought another 100 shares at 14.5 here, and 400 shares at 14.5. Let's see, 500 14.74, a little bit higher. 100 at 14.5, 100 14.5, 500 14.65, and then let's see, I think I skipped a day here, and yeah, another 500 shares at 14.49 and 500 at 14.35. So it didn't move straight up. It backtracked a little bit, but it was still looking like it was going to move quite a bit higher. So I decided to average in. I think my average price is about 14.5 on the stock, and ended up doing pretty well on it with 4,000 shares. Ended up making about 4 points, I believe. Let's see on the sell side of this. So on 426, started selling the stock, and I got out all of it on the 26th. So I sold 3,000 at 18.5 about 5 weeks later, and then sold another 219, another 1,000 at 19 or so, and 700 at 19.17, and finally sold the final bit, 1,000 shares at 19.13 and 100 shares at 19.13, and I was out of the stock. So a good trade. It's the kind of trade that you can do. You look for the companies that have good fundamentals, that have good price action in the chart, and then you have the patience to sit and wait for the profits to unfold, and then you have some knowledge about, okay, this isn't looking right, the market's looking a little bit weak, time to take profits and get out of the stock. In the next trade, I'm also going to go into another tech video, right? It's a video where I invested in or traded in a stock that was in the Internet of Things, a pioneer in the Internet of Things. It didn't actually work out it started working really well, but in the end didn't work out quite as well, and there's some lessons to be learned there. So I look forward to sharing those lessons with you in the next video.